Hi everyone, this is Jordan at Pure Elliott Wave with your weekly video update on the euro dollar. This week we saw upward movement that invalidated the previous X expanding flat for minor wave X, but a new wave count fits the price action nicely and still expects downward movement yet to come. So let's look at the weekly chart here. On the weekly chart, we see a grand supercycle wave B completed at the end here, and currently we're most likely going up into a supercycle wave C, which would be comprised of an A, B, C zigzag. And in that cycle wave A, we're currently working on primary 1, which must subdivide as a motive structure. Our invalidation for this current wave count would be if any of those motive waves reaches beyond the start of wave 1 at 0.95364. Currently, we have completed intermediate wave 1 and are working down towards wave 2. And it should be noted that within this combination, there is no invalidation for wave X to the upside. A common standard we use here is if that X wave becomes 2 times the length of W to the upside, we'd probably invalidate that as being not likely. It should also be noted that W was a zigzag, and then X could be any structure. So there's really no restriction on what this structure could be, which makes X waves just that hard to predict. Wave Y would likely complete a double zigzag, but there's no restriction on that either. So it's most likely that it would be a zigzag to the downside, but we could have a triangle, we could have a flat as well. So the zigzag would fit the wave 2 characteristics, which usually show wave 2 being a sharp correction in the opposite direction of the new trend. And I have noticed that in the past, the euro dollar does end with sharper price action to the downside, and when it's trending upwards, it usually has a rounded top. So that's something to note moving forward. We could see a very sharp movement towards the downside of this trend. Price this week did reject off of this channel, which encompassed the previous bear trend to the latest peak, which I thought was a good sign for labeling this X wave complete. And I'll show you a little more detail on the daily chart. I'm gonna pick up from the bottom of minor 2 right here. On the daily chart, we can see more detail for intermediate wave 1 and intermediate wave 2 in progress right now. We have copied over that best fit channel and see a very clean rejection right here at the top of X. It should be noted that wave C of X was almost exactly 2.618 Fibonacci ratio of wave A, and we have A, B, C for an expanding flat. It was really important to me to maintain this impulsive structure inside of my new wave B here. So that was a really clean impulse, and with this wave count we do maintain that. My new wave B subdivides as another expanding flat, A, B, C, inside of an expanding flat, which almost gives it a triangular structure, but the triangular structure was invalidated when this wave exceeded 150% of minuet wave C here. Target zone for intermediate wave 2 is for it to reach 1.618 the length of wave W. We changed it from 1:1 ratio with W to 1.618 because X has retraced a decent amount of the downward movement, so it's more likely for wave Y, if it were a zigzag, to go 1.618 just to deepen the correction characteristic of a sharp correction. Another target would be the 618 ratio of intermediate wave 1, which gives us a 132 pip target zone for the target. Should be noted That wave X does not have an upward invalidation as previously mentioned, so this X wave could continue upward, but with the recent price action, Fibonacci ratios, candlestick patterns, volume profile, and technicals, I believe downward movement is more likely at this point. Let's move on to the hourly chart. We're going to pick up in this area right here at the bottom of minute B. On the hourly chart, we can see the end of minor wave X here. This price action subdivides nicely as an impulse, so X may continue higher, but I have it labeled most likely as ending here, and minor wave Y continuing downward. We have a really clean impulse to the downside here, with minuet wave 1 complete and minuet wave 2 continuing upward, most likely as a sharp correction. In the next coming hours of the week, when the market opens, we'll have a little bit more clarity on the structure continuing downward. Within minute wave A, which most likely will divide as a motive structure, no wave may move beyond the start of minuet 1 with a short-term invalidation of 1.09296, and I labeled that as a short-term invalidation just because I most likely see X over at this point, but it's possible that it could go higher. The odds are in our favor with the recent technicals that show downward movement is more likely. So with that said, let's go into our weekly volume analysis. The volume data this week showed a slight increase overall versus the average, decreasing week over week. However, we did have an evening star, which is a bearish signal. Money flow is still neutral, and on balance volume has a technically weak range with still no signal. With the recent breach of support at 1.075, which is about here, I've removed that line, and we're currently eyeing resistance at 1.10, which is overhead, and then support under 1.050. With the consolidation right now and no clear trend, I'd want to see a break of either one of those levels to signal the next price movement. The bearish upper wick does support the bearish Elliott wave count. We also have pretty thin support underneath, and the long wicks in each direction definitely lend to the consolidation analysis of ADX. Stochastics and RSI are still neutral, and ATR is increasing as price decreases over the long run. So if we did break down that 1.050 support, would likely be a very sharp correction, lending support to the Elliott wave count right now. For the volume data on the daily chart, through the week we saw declining volume with the uptrend, and the most recent 2 days volume increase with bearish pressure. We also had an evening star at the top, which I'll show you in better detail in a moment. Money flow is currently neutral. Unbalanced volume is forming a new range. This current orange trend line isn't very technically significant with the recent breach, so I'd like to see a new range be formed before a valid signal would happen. Here we can see the last week in a little more detail with regards to the candlesticks, support and resistance. This head and shoulders is still intact with the left shoulder, head, and the right shoulder here. Remember, if we see a close through this neckline, it could be a very bearish signal. We have support underneath in a little more detail, 1.050, resistance overhead at 1.1. And throughout this consolidation, we had a variety of different reversal candlestick patterns. We had a bearish engulfing, a morning star, evening star, some really bullish candlesticks here, and then a shooting star now at the top. So if I were going to trade this with my own money, I would wait for a breach of support. I would not anticipate the trend. ADX is flat right now. However, if we did see the negative DX line cross over the positive DX line with an upward sloping ADX signal line, that would be a very bullish signal. RSI neutral, and stochastics are actually signaling potential bearish movement ahead. Both the lines reached overbought and they are now leaving overbought. And ATR is increasing with downward movement and declining with upward movement, which shows that if we did have that breakdown, it would likely be sharper rather than gradual. The moving average situation is bullish. Price is trading above all three moving averages, with the middle 50-day moving average above the 200 and the 13 sloping upwards just under the 50-day moving average. In summary, I believe a bullish case could be made because the moving averages look bullish. The recent breach of support to the upside, which was right here, and that X waves are notoriously hard to predict, as are combination corrections. For the bearish case, the evidence I'd put forth is the Elliott wave count requires a Y wave down, and we haven't even reached the 382 Fibonacci retracement for the previous impulse, which is about right here. So wave 2s usually retrace a lot more than that, but we could have an exception here. Also, for the bearish case, the volume profile looks very bearish on the daily, with decreasing volume to the upside and increasing at the top and to the downside. The candlestick pattern also lends support to this with the shooting star and the head and shoulders. Also, for the bearish case, we have the stochastics leaving overbought here on the daily chart. And we had that rejection off the trend line for the best fit channel encompassing all previous price action, which was right here. So overall, I'm pretty confident in the bearish count at this time, and we'll see what happens over the next week. This has been Jordan Marshall at Pure Elliott Wave. You guys have a good rest of your weekend.